Hello everyone, happy Friday. Gonna end the week a little bit earlier today because I also have family visiting from Taiwan. So I'm just trying to take it easy and not trying to do anything stupid on a Friday. I think it's important to know that which days you historically do better or worst on. Historically speaking, Fridays are my worst days. So today coming in, I'm just kind of trying to size down and taking it easy as well. So let's look at the first stock I traded. Is MRNA on the long side. So they are, it's being announced that they are going to be included in the S&P 500 and replacing another company. So obviously that's really bullish news for mRNA, Moderna. And if you look at the daily, the stock has been steadily trending up and breaking to new all-time highs. And I think it's just a couple days ago where I said stock is breaking through all-time highs. I don't short it. And usually they are better longs on dips. And that was the case for MRNA today. You can see a pretty big gap up. If you look on the 5-minute, this in previous days close was about like 260s, gapped up all the way to 280s. And I'm not gonna lie, at the open, this little spike and drop, spike from the open to 278 and drop down to 271, and I started making like these low volume consolidation around here. I was watching it and thinking that, this does not look like a good long because of all these wicks. Yes, it is slowly reclaiming VWAP, but it wasn't on high volume until it really actually broken out. So especially when it's on a Friday, I was trying to be more conservative, perhaps too conservative, but it's better safe than sorry. But that's why I was looking at the stock on the 5-minute instead. After 5-minute breaks out, breaking through the pre-market highs, 280s, 282s, that's why I started getting in long. Small size, I never got any big size trading today just because I'm really trying to be careful today. 283s, 284s, I added into it, sold some into the push, 287, 60s, and I re-added back some, 283s on the pullback. And by the way, on a stock like mRNA, especially on a Friday where, yes, the volume eventually did come in, but at the open, it was kind of choppy. So I was trading on 5-minute after seeing that chop around the VWAP area that I showed you guys earlier. So a lot of times these large cap stocks, if it's choppy, if the volume is not consistent, if the spreads are wide, then I go to use the 5-minute. So that's what I was using today on mRNA. Executing on the 5-minute, bought the dip here, re-added some. And here, this is where I start getting chopped up. Even on the 5-minute, it was a little bit uncertain. So that's why I got chopped up. Got some here, and I rebought some here. Pretty much everything here, I started giving back money up here. So usually that's a sign that I know that if I start giving back profit, once or twice, then I should just leave the stock alone. Sure, I could have made more, but after giving back, I think I gave back about 30% of the profits on the stock. Usually, that's a sign that, I'm starting to force trades. And it's important to kind of know that about yourself. If you see yourself giving back some profits, 10%, 20%, that's fine. But if it gets to the 50% mark, a lot of traders, that's where they get into the trouble of, they get frustrated that they lost half of the profits and they try to do everything they could to make it back. But on a day like Friday, where things are choppier, volume is lower generally, not as many gappers or stocks running, then that's where a lot of traders will start running into trouble, and instead they'll give back everything, if not more, and going from green to red on the day. I'm speaking from my own experience, so that's what I mean by you have to know yourself. You have to know your own personality and what triggers you. And giving back profits, I know, is one of the things that would trigger me personally. So that's the reason I know when to just leave the stock alone. So after this, I did consider re-longing around the 280s, but after seeing this action, steady sell off on the 5-minute for pretty much like 30 an hour straight, I decided to leave the stock alone. And I think that was a good decision, even though I did give back some profit. But I'm still green on this trade. The next stock I traded is SGOC. This is just a scalp short. If you look at the stock, this thing was kind of started running up on July 9th from, wow, $3 all the way to $19 the first day. And the second day it went all the way to $29 on that day. That was pretty impressive. I think I did trade this thing on the long side. I forgot it was this day or that day, but it was in one of my recap videos. And if you look at the daily, the last couple of days since pretty much the first red day, I did short the stock on this day, I remember now, on the 13th. But if you look at the 14th and 15th, every single time it tries to push towards the highs, it gets sold into. And over here as well. So that means there's a lot of selling pressure around there. And that's because they probably got a lot of people trapped on the long side up here around 17, 19, and even above, all the way to closer to $29. Because when there are stocks like these, I just go straight up from $3 to $29 like nobody's business. A lot of times they trap a lot of poor longs, and unfortunately who are bag holding the stock on the way up over here. So follow your stop losses. Don't bag hold the stock. It's always sad after seeing a lot of these runners like these, 1 or 2 days. Usually the third or the fourth day, then I'll start seeing people commenting that they lost a lot of money going back to stocks like SGOC. So, it's really sad to see that. And the YouTube comment section is a good sentiment gauge. Where I see, when there's a lot of stocks running up, it's easy to make money because you just click buy. But on the red days, where these parabolic breakout stocks pull back a lot more than most people have thought of, usually the newer traders who are just buying whatever is up or following chat room alerts, that's buying all the breakouts on the way up, they try to revisit, and that's usually where a lot of people unfortunately blow up. So I was in that boat too, my first year in trading, so that's how I know about this. But anyways, that's the reason for the shorts, because if you look at the charts the last couple of days, every single morning push, especially this day, I didn't short it on this day, on the 14th, if you see, it nice all the way to 19, and after that, just no bounce city whatsoever. Same thing again yesterday, spike from 12 to 16, and just dump. So today, exact same thing, spiked all the way to 1440s. Actually didn't have a big position because the locates were kind of expensive. But I did short partial size at up here, 1425s. Shorted here, covered small. Actually, no, it was a scalp, so I covered all of it and had a small reshort around here. Just tiny, like 50 cents. Nothing much. But but that's the reason you never want to buy these kind of breakouts. There's a lot of people trapped on the long side, all the way up here, 23s, 28s. That's the reason each spike it's sold into, because if you were stuck holding the stock, then you want to get out, right? You want to get out for a smaller loss. So anyways, that's just kind of like the thought process behind this. Even if you can't short, just don't long these kind of stocks after the huge run up on the first day and second day. Just don't visit these stocks after on third, fourth, fifth, and today. So it's just as important to know what kind of stocks to avoid as it is to know how to make money in trading, because it really doesn't matter how much you make if you keep on losing it back on stocks like these. Next one is NEGG, NEGG, New Egg. This stock, same as SGOC. I mean, if you look at the daily chart, it's exactly the same, right? The huge run up day 1, 2, well, actually it started running up for a couple of days, but it really didn't go parabolic until this day on the 7th. Both of them are from the beginning of this month. So this thing ran from 29 all the way to 75. I think I also traded this long on this day, and I shorted it on this day, the second day. It's in my past recap videos. Like, I'm not making shit up, okay? But anyways, if you look at the daily chart, ever since that huge red day, it hasn't been able to reclaim $60. And each spike it's sold into, red day, spike and sold off, spike and sold off. Yesterday as well. And today, that's the reason I was more short bias on the stock. So when this thing spiked to 35s today, 35, you look across the last couple of days trading on the 5-minute chart or even on the hourly chart, you can see some decent spike resistance around this 34, 35s area. And then above that, you have 42. So that's the reason I had a small short around here, 34.60s. If that breaks higher of the day, I'm going to stop out and wait for the stock to perhaps go to 40s or 42s. But as you can see, execution-wise, after this huge spike to 35s, I got in a short. It was kind of expensive. And I definitely did cover the first piece way too soon, because I was looking at this on 5-minute and 2-minute. It kind of looks like it was consolidating on the 2-minute chart, so that's why I covered some of it. But after that, this thing just dumped. And then I covered from 34.50s, covered small 34s, and I was out of the rest at $31.60. Both NEGG and what's that stock? SGOC, they're just small short scalps for me. So this was a pretty straightforward day, nothing amazing today. It's a slower Friday. I think I stayed pretty disciplined, even though I did give back some profit. I was able to catch myself doing that and just stop over trading Moderna stock overall. So if you find yourself in a similar situation on Fridays or any particular day that you're tracking that you're just bad at trading, let's say it's a Monday or a Tuesday, then it's a good idea to kind of, catch yourself on that day or size down, knowing that you tend to force trades or you just make bad decisions on those days. I think for most traders, it will be Monday, right? Because a lot of people just FOMO and buy everything on Mondays. But for me, it's a Friday, and that's why I'm extra cautious today. If you guys have any questions, remember to leave them in the comment section below, and I'll try to help you out. Thank you guys for watching, and stay safe. I will see you guys next time. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.